Welcome back, everyone. Now, over the last period, Applied Digital, APLD, has experienced extreme volatility and is currently trading in the roughly $29 to $31 range. On X, formerly known as Twitter, the narrative has been completely dominated by one major catalyst: reports that Nvidia has trimmed its stake in the company. That single headline caused a sharp 7.9% to 8% intraday sell-off, which immediately flipped retail sentiment from fear of missing out to fear of holding. Social media is now split right down the middle, with one side screaming insider selling and the other side pointing out that institutions are not panicking at all. When you actually look at the facts, Applied Digital still holds around $2.3 billion in cash, recently secured $50 million in financing for the Polaris Forge 2 data center, and continues expanding infrastructure exactly as planned. In other words, the business itself has not broken, only the stock price has reacted emotionally. From a technical perspective, the damage is obvious, but also very telling. The stock has slipped below its 50-day moving average near 31.99 cents and is now drifting toward the psychologically important 200-day moving average around 26.83. At the same time, the 14-day RSI is hovering near 30.9, which historically places APLD in oversold territory. That doesn't mean it must bounce tomorrow with all, but it does mean selling pressure is becoming exhausted. The MACD remains bearish at -1.31, confirming downside momentum. But here's the key detail most people are missing. The sell-off occurred on roughly 33% lower volume than the 35 million share average, which strongly suggests that large institutions are not dumping shares in panic. After peaking near 38.70, the chart is now forming a falling wedge, a structure that often resolves to the upside. A confirmed reclaim of $32 would immediately invalidate the short-term bearish thesis. Fundamentally, the story remains explosive. Applied Digital's fiscal Q2 2026 results showed a staggering 250% year-over-year revenue increase to $126.6 million, driven by its high-performance computing and AI superfactory strategy. The company has fully transitioned from crypto hosting into a pure AI infrastructure play, with a $16 billion contracted revenue backlog over the next 15 years, including massive agreements with CoreWeave. Yes, the PE ratio is still negative due to aggressive capital expenditures, but adjusted EBITDA of $20.2 million confirms the business is approaching operational profitability. The debt-to-equity ratio of 1.79 is elevated, but it is manageable given the cash position earmarked for long-term build-outs like Polaris Forge. Analyst sentiment has not collapsed either. The current consensus among 14 top-tier analysts remains a buy, with a median 12-month price target of $37, implying roughly 25 to 30% upside from current levels. For aggressive traders, a speculative bottom fish entry exists near the $27-28 support zone, especially if price reacts off the 200-day moving average while RSI remains oversold. For long-term investors, this entire move looks more like a value reset than a thesis break. The AI data center demand story has not changed, and accumulating below $30 while capacity scales toward 100-megawatt facilities positions investors for a potential 2026 move toward $50. Now here's where I need you to zoom out. Market sentiment right now is broken. We are in a risk-off environment, and that disconnect is dangerous. When you look at the S&P 500, it is less than 2% from all-time highs, yet many individual portfolios feel like they're in a full-blown bear market. That mismatch tells me something is wrong under the surface. Many investors are holding high-volatility growth names and expecting 30-day miracles in a market that is selling off for reasons no one can clearly define. That's not how wealth is built. If you have a plan and a long enough timeline, being green in APLD is not speculation. It's probability. I do not believe $42 to $43 will be the all-time high for this stock. I fully expect it to surpass those levels in the future, right? Because long-term AI infrastructure demand does not disappear. Could the dip further? Yes, absolutely. That possibility exists. Geopolitical tensions, especially in the Middle East, could pressure risk assets further. If Bitcoin sells off hard, that's usually a warning sign that Monday could open red for stocks like APLD. Bitcoin acts as a risk-on, risk-off indicator, and weakness there often spills over into high-growth equities. But even in that scenario, the company itself remains strong. Applied Digital can survive the winter. Strong leadership, strong capital backing, and a clear long-term roadmap matter far more than short-term headlines. As for sector euphoria, the AI space is cooled, for now. What I believe reignites sentiment across the entire sector is one major event: the IPO of OpenAI. When that happens, and if it debuts anywhere near a $1 trillion valuation, the entire AI ecosystem will re-rate higher again, and names like APLD will benefit massively from that renewed attention. If you want exact buy levels, exact scaling strategies, and real-time guidance, that's where Top Trader Academy comes in. It gives you direct access to me, portfolio reviews, day trades, swing trades, options alerts, lessons, and one-on-one support. Shorting, especially in markets like this, is an essential skill, and we teach that as well. The community continues to deliver real results across all market conditions. If you found value in this breakdown, hit the like button. It truly supports the channel. Subscribe for more honest, no-hype market analysis, and turn on notifications so you don't miss the next update. If this video crosses 100 likes, I'll release my full bullish APLD coverage next. Thanks for watching, stay disciplined, and I'll see you in the next one.